We're seeing Asian stocks extend that sell-off from Wall Street. IMF, of course, cut its growth forecast for global growth. Next year, it's expecting it to come in at 3.8% compared to the 4% it was forecasting just a couple of months ago in July. And that comes less than a week after the World Bank had its own forecast, including a cut to China's growth this year. Is coming in, expecting it to come in at 7.4% instead of 7.6%. So overall, the growth outlook ahead is not that rosy. In terms of other macro data out today, we had the HSBC China Services PMI coming in at 53.5. That's just slightly under the August reading of 54.1, which was an 18-month high. So overall, still a pretty decent reading. The indicator suggesting the economy's or manufacturing or services is still expanding, so that's helping Chinese stocks with a bit of support, which is bucking the trend across the rest of the region. Most markets across the region under pressure. There's been markets are having a risk-off approach on the lowered outlook from the IMF, which has been giving investors a bit of excuse to cash out and take profit. One of the biggest losers today is Japanese stocks. Earlier in the morning, the yen was gaining against the greenback, and that's put stocks under pressure. Heading into tonight's the FOMC meeting, we're seeing investors position themselves with the dollar strengthening against the yen, so that's helped the Nikkei pare back some of those losses. But overall, most markets in the region still under pressure.